but Lockheed started this in 2007, like 10 years before anyone was really even talking about venture investing in technologies that could help national security. I always say being early looks a lot like being wrong. And so, you know, going through that, fighting for pennies, and then now it's like everyone wants to come to you.
All players, low down, active, bullseye, 1327. Put tactical. Lights on.
We're live. Welcome to the show. Today I'm joined with Jake. How's it going, Jake?
Good, man. How you doing?
Doing good. Last time we cycled Tim in here to help me with co-hosting, and today we brought you on board. Gave Tim a break back to the bullpen.
Is that an upgrade or a downgrade? I don't know.
I think it depends on the lineup that you're pitching against, honestly. Which gets me to our special guest today. And I mean everyone's a special guest, but this one's extra special. We have for the first time a Defense Prime person coming on the show, and we don't do any small stuff here, so we swung for the fences, and so we have someone from Lockheed Martin on today. You know what they say: go big, go home, fly like a champion. So not only that, but it's a special part of a special prime. More on that in a second. But that's a long wind-up to introduce our guest today, which is Chris Moran from Lockheed Martin. Welcome, Chris.
Hey, guys. Thanks for having me.
Tell us a little bit about yourself and your background, and then we'll jump into to some fun stuff.
How far back do you want me to go?
Well, who are you, and how did you end up at Lockheed Martin?
Okay, great question. So I'm Chris Moran. I run the venture fund at Lockheed Martin. I joined Lockheed about 7 years ago, and the goal was to reboot the fund. Lockheed's actually had a fund since 2007, but it was doing mostly enterprise software type things before that. And we pivoted it to do really focus on strategic dual use investing. So everything we've done in the last 7 years has been focused on national security, dual use, strong commercial traction, but technology that can be ported over into the defense space. Before Lockheed, I was at a company called Applied Materials. I worked there 30 years. Applied makes manufacturing equipment for the semiconductor industry, so I was in the semiconductor wars for many years and did a lot of different jobs there, from engineering through general management, head of marketing, head of strategy. But for the last 8 years I was there, I was in charge of their venture fund and brought those skills over to Lockheed to get that ball rolling.
Semiconductor wars. We're maybe on the cusp of a different kind of semiconductor war now, huh?
It may be the semiconductor war 2. Word kind of like.
We got to come up with a catchy name for that.
Yeah.
Silicon World War II or something. Before we get started into the venture side of Lockheed Martin and all that, I've got an icebreaker for you. Do you like movies?
Of course.
Of course, who doesn't, right? That wasn't the icebreaker. That was just the I'm just teeing it up for you. What is your favorite Lockheed Martin product that has been featured in a movie?
Oh, now that I work at Lockheed Martin, it seems like every show that I see has a Lockheed Martin product in it. I mean, it's just amazing. I'll be sitting there watching a TV show and a Black Hawk will fly through. I'm like, Lockheed Martin Sikorsky. Or the C-130s are in everything. You see them virtually any kind of Army action movie has a C-130 in it. Even like I think Sylvester Stallone threw a C-130 in one of his movies as well. But I have to say the recent movie has got to be the Dark Star in Top Gun. That was really cool, and the backstory behind that and a few other things make that really really interesting movie placement. You see companies put like a can of Coke or something. We put an entire aircraft in that movie.
Didn't the Chinese they like repositioned a spy satellite to take pictures of the Dark Star?
That's what I heard when they rolled it out for the first time. I heard from some friends that not only one but two satellites were repositioned to photograph it. And people were joking that the agency was going to send their counterparts some tickets to go see the movie to save them film or whatever.
That's funny. Well, I'm glad you didn't say, as much as I love the F-16, I'm glad you didn't say Iron Eagle. And I can't believe they made 4 Iron Eagles. That's just crazy.
Okay.
Okay, so you went from semiconductors into defense. So
Yeah.
so how did you make the pivot into defense? We all work in the defense sector, and there's definitely easier ways to make money out there. So what actually pulled you into that?
Well, a couple things. One is I didn't say, but my first job out of college was actually in defense. Was working for a company in LA called Hughes Aircraft. So I worked for 4 years at Hughes, and ultimately my career kind of ended with the defense drawdown. Right, everyone was downsizing and things were going on. So I said, what the hell? A friend had moved up to Silicon Valley, and I said that's kind of where I want to be. But the odd thing is I'm a mechanical engineer by training. I went to MIT. I got a couple degrees in mechanical engineering, and here I am dropped into semiconductors. So my role was actually designing the handling systems, the robotic systems, and so on and so forth. Not directly in the semiconductor part until later in my career when I was more a general manager. But I had already been bit by the defense bug. And when the chance came to jump over to Lockheed, where I could actually see the things that we make as opposed to semiconductors. And I have to tell you, the first year I spent traveling around, meeting the different business units, touring the different factories. I toured the missile factories, the F-35 factory, the helicopter factory. I mean, it just mind blowing, the stuff that you see. And for a mechanical engineer like myself, this was just nirvana to see that stuff. So it's been a real pleasure working here and seeing the equipment and things that these folks develop.
So you went from chips. So first of all, Hughes, I think that acquired by Raytheon, so their radar product line, right?
They got split. I think Northrop bought a piece, and Raytheon bought a piece, and Boeing bought a piece. So they kind of got completely, split up and moved around. I was in the radar group, and then the what was called the electro-optical and data systems group, which went to Raytheon. I think radar may have gone to Northrop. Missiles went to Raytheon. Space went to Boeing, I believe.
This was like mid 90s, like after the famous Last Supper.
Yeah, early 90s.
Yeah, probably 93 to 94 time frame, I'm guessing.
That's when they split.
Yeah.
I had left before that, but that's when they.
Oh, okay.
When they
You saw the writing on the wall. You jumping off the sinking
Well,
ship?
they were cutting back programs and things, and it just wanted to do something different.
All right, so Chris, to read this back. So you went from mechanical engineering, decided to not do that, went into silicon chips, then you went to hardware. How did you get into finance?
I was a general manager. I was running business units at my previous company, so I sort of cut my teeth on P&Ls and balance sheets and managing budgets and that aspect. But what jumped me into venture was one of the business units I was in charge of. I actually recommended to close. I mean, there were kind of issues in the market, issues with the product. I inherited this group. It was already kind of the 11th hour, and I made the choice to close it and preserve the service group that was in it. That was actually made a lot of money over several years after. But the actual development part just wasn't going to make it. I recommend to close it. And the CEO said, "Wow, you've got great business acumen. How'd you like to do venture capital?" And I was like, "Oh, okay." Actually, he said, "You just fired yourself. How'd you like to do venture capital?" I said, "Oh, I hadn't thought of it that way." And I live here in Silicon Valley. Of course, I'm aware of venture capital, but I never did it before. So I spent a crash course teaching myself what it was, meeting as many people as I possibly could. I met, I saw some amazing deals. The famous Solyndra deal in the early that ultimately blew up. That was on my desk for review at one point. The folks that worked there used to work with me at Applied. So got a very, very fast education in venture capital, the good and the bad of it, and had a good run doing it at Applied for 7 or 8 years, and then the opportunity came to join Lockheed, and I jumped at that because what we were doing, where we were investing in Applied was really more focused on semiconductors, right? Thin film depositions and how you could use that. And now at Lockheed, you do radar and quantum and AI and autonomy and, just cool. For a mechanical engineer, just cool stuff, right? Compared to that. So
when you came over to Lockheed, did you was there a team in place and you got to sort of slowly grow it, or were you rebuilding from scratch the venture program?
There was basically one guy, and he's still with the team. A great guy. He's really helped provided continuity. There were, certainly processes that were in place. We probably modified all of those, but it was a good start. It was easy to start. I think we did our first investment within a month of me joining. But yeah, we had to build the whole team out. So we went from me and one other person. We have a team of about 12 now, 4 focused on leading investments. So 4 investment managers, 4 associates, analysts that support them. And then we've got 4 people that do post-investment integration, whereas we're trying to get the technology in front of the different business groups and see if we can find applications in those spaces. So now we're finally able to address sort of the pre, the post, and the integration work in one team. Whereas obviously we couldn't do that with one person on staff at that time.
What was that first investment?
Before we get into the investments, there's 3 of us in the pod today. 2 of us work in venture capital. The other one is dumb. And so Chris, if you were to explain to people who've never heard or don't know what we're talking about before we jump in, how would you explain to like your kid what venture capital is?
To my kid. Well, I mean, there's 2 aspects of it, right? We're a strategic investor. So essentially what we're trying to do is build the ecosystem of dual use technology, right? If you look at what I call success is if I can build up a company to ultimately become a great supplier to Lockheed Martin. That's my goal. So I'm trying to provide working capital to companies to allow them to grow into that space. But that's the strategic investor view. If you talk to anyone else, what is venture capital? It's taking big risks and hopefully bigger opportunities to return value to investors and to the company. And you do that through buying equity, shares, stock, like as you would on the open market. But these are illiquid markets. Buying shares in these small companies and working with them, hopefully so that they grow and thrive and provide value, enterprise value, which ultimately can turn into liquid value during an exit, like an IPO or an M&A or transaction like that.
And for a track record, and we'll get into some of the details in a minute, from the website, looks like established in 2007, about 60-ish, 61, I think you have listed on your website for historic investments. And
I think it's a little higher. A little higher than that.
A little higher now?
We got a couple more that haven't made it on there yet, but yeah, 2007. Okay. And in 2016 or 2017, we doubled the size of the fund. So it was established in 2007 with a $100 million fund. We doubled the fund in, I think, 2017 to 200, and then we doubled it again to 400 million in 2021, 2020, something like that. So we're investing at a $400 million fund currently.
This is a bit of a wonky question from the venture side, but is it a dedicated fund? Is it off the balance sheet where you're just sort of drawing down on a theoretical limit, or how do you folks manage it?
It's a little of both. So I would call it a carve out. So it's a fenced off piece of the balance sheet, but we do, it's not sitting there in a pile or anything. We call it as needed. Lockheed certainly has enough liquidity for us to draw on that. The way we operate is we forecast our needs quarterly by looking at our pipeline. We're like, if 100% of these got invested, how much cash would we need? And then it's made available to go out to us. So we operate it like a fund. We track every dollar. We track every increment, every decrement, returns. We're allowed to pour back in and reuse. So if I have a big exit, we pour the money back in and reset the amount that we're allowed to invest.
So it's not in a wall safe behind one of those books there.
No, unfortunately.
Secret compartment, you tilt the book on the bookshelf.
Apparently that would have been safer than Silicon Valley Bank, but no.
FRB today. I saw a rumor that they're going to get put into receivership this weekend. I hope that's not true, but get ready for another busy weekend, Chris.
Yeah. We did a lot of work that weekend. We have not figured out who's exposed to First Republic. So.
I read in 2021 your fund had 3 exits. And I'm gonna mispronounce them because they're all funny names.
Okay.
Ava,
yep.
AEVA,
Uh-huh.
Ava,
yep.
IonQ, and Terrain Orbital.
Yep.
Is that right?
Yep.
Okay. What you just kind of explain, like, what were they doing and how did you exit that investment?
Well, we all those companies we were actually awarded shares, and since they had IPOs, those are all SPAC IPOs. There were various lockup durations that we had to endure. So some we were allowed to sell right away because we were above or below, excuse me, below an ownership threshold, so we monetized pretty quickly. Others took literally months of trading, small blocks to get out. Something I never had to, in the almost 20 years I've been doing this, it's really rare to be given shares, you know, in that way. Even on IPOs, a lot of time you're liquid right away, but SPAC IPOs have different requirements. So we had shares, and we were essentially running a trading desk, selling out of those companies over time. We've not sold any of Terran Orbital. We have a lot of strategic programs with them, so we're holding those, but we did liquidate the other shares at this point.
And that's Terrain Orbital is small sat production,
Correct.
right?
Yeah, they're a strong partner with Lockheed Space on a number of space programs, and that's been a very successful collaboration to date.
The weird one, which I'm like, I still don't understand what this is. IonQ. It's quantum computing to use trapped ion technology. I don't even know what that means.
Yeah, so there are lots of different phenomenologies in quantum, and if you look at the whole portfolio, you see we've done three different technologies: annealing with a company called D-Wave, which actually had a SPAC IPO earlier this year, I think. IonQ, which is the trapped ion, and atom computing, which is neutral atoms. So they're all just ways of creating these entangled elements, electrons, qubits, if you will, which are the elements of computing. And there's several other ways to do it too. There's photonic computing that companies in the Valley are working on as well. It's not clear exactly which one will win, right? And the length and duration of the entanglement allows you to do more computing, and all these folks are kind of fighting out to see not only who can have the best technical performance, but like in the semiconductor world, and this is the analogy, is that even where there was a really elegant way to go forward to follow Moore's law, the way that always won was the cheapest way. I mean, it's economics. It comes down to that. So once these folks have evolved and they have mature tech, then we're going to start seeing who can actually do it less expensively, and ultimately you're going to build the quantum computers out of less expensive qubits. So we decided we couldn't tell them apart. We're working with all the companies right now, and hopefully one really gets ahead of the others. But we thought at this point, the early stage of quantum, that we should have a couple of pokers in the fire, if you will.
So it's interesting that like those are. I'm gonna get this completely wrong. You guys are the VCs in the room, not me. But I understand like a traditional fund has like a life cycle of, I don't know, call it 8 years. A year in the front and back for admin. And so some of these technologies, like deep tech investing, have a tech maturation that's probably like longer. So do you have like a rolling fund, or how do you manage that?
Yeah, so we have, like we talked about it a little bit, we have what would be called an evergreen fund. So we don't have a terminal date. We don't have to return all the money in a big bundle back to our LP, and our LP, of course, is Lockheed Martin. So we continue to roll. So you would call us patient capital in terms of the way we operate the fund. We don't have an end date or an expiration date on the money that we have. So some of these longer bets we can take, but they have to be balanced with strategic need and intent, and they have to kind of intersect with where we're headed down the road. So we're not in the habit of just making long bets for the sake of making long bets. They have to have a strategic tie to what we're doing.
I don't want to dive too deep into quantum. I think that gets us off topic, or could get us off topic. But where do you see the strategic?
You probably already got as much as I know about it, so I don't ask anymore.
What use cases do you see for quantum in 10 or 20 years?
I mean, encryption's a big one, right?
Encryption is the one that's on everyone's mind, right? Or undoing encryption. I think there's a big fear that folks are storing up data with the hopes of decrypting it down the road. Obviously, we're in an industry that is very concerned about that. So that's one area. But I think there are other pursuits and needs, particularly some of these hypersonic vehicles that people are talking about. Navigating on those is going to be extremely difficult. By definition, any closed loop system is always looking backwards in time. right? Because they're actually called lead lag controllers and so on. But we need an ability to sort of look forward in time on things that are moving that fast. And so that's one of the use cases. How do you improve navigation? And then there's communication and radar and sensing and any number of things foundationally are focused on quantum effects, and some of them are focused on the use of qubits. But just being part of that technology, seeing how it evolves, I think is important to us and the company, and obviously national security. So that's why we've made those bets.
It sounds like you really have a special place in your heart for quantum computing, but I don't know yet. So you got a lot of babies in your portfolio.
Right.
What's your favorite one? What's your favorite right now? The one you're most like fascinated with, interested in, excites you?
So the ones that are really cool is where you see somebody apply practical technology in a new way and come up with a great result. And we closed an investment a couple months ago in a company based in Chatsworth that has just figured out how to manipulate metal in a way no one has ever seen before. And the way they describe it to you is that they're a bunch of SpaceX and relativity space guys. They are frustrated with some of the metalworking stuff that was going on, and they just figured out how to manipulate sheet metal in the same way that hot rodders would bang out steel fenders with ball peen hammers, back in the day. And they've applied that technology to robotic methods, and just watching what they can do and how they can do it has really inspired us to work with them. We've made an investment, and now virtually every business group in the company is focused on talking to these guys, and we hope that we get some good programs out of that. And name of the company's Machina Labs. They're in Chatsworth, and just cool. Just seeing again practical stuff applied in a new way with an amazing end result, and we're really excited about that one. It's not the only one I like, but that one is top of mind right now.
No, that's great. This isn't Machina Labs, but it's related to exactly what you said, and actually it's a metal. I saw just yesterday a 3D printed steel wrench. I don't know if you guys have seen this, and it's basically has a bunch of it's like a lattice design, so it's not solid.
Yeah.
And it's 100% of the strength, tensile strength, but 70% less weight. So you could make the same tools for 70% less material.
Yeah. Yeah, we have an investment in a company called Entopology, which has been doing generative design long before it became popular, and their focus is generative design on metal parts like that. With that in mind, how do I maintain the strength in the axes that they need it? So that's the other thing, is if you have a dominant axial use case, they can design a part that has very, very less material, less mass, but provide all the structural strength you need in the direction that you need it. Very cool company as well.
This is maybe an internal Lockheed politics question, but I started my career as corporate VC, very different company. It's like 60 people, very small.
Yep.
And I found that investing the company's assets in businesses outside the company was not very popular with the product managers inside the company who wanted some of that capital for their own pet projects. Do you ever run into that tension at Lockheed?
No, never. No, I mean,
okay.
it's natural. I mean, I think I have this list I should have brought here of like the 11 most frequently heard excuses why not to do what we're doing, and a lot of it revolves around that. Hey, I could use that money. But the fact of the matter is, Lockheed, like any major corporation, is very busy, right? The beginning of the year, the planning process delineates in the case of Lockheed, 1,000 programs or more, right, that the company's going to focus its resources on. But there's literally tens of thousands of things being done outside of Lockheed that are valuable nonetheless, right? And so what we try to represent is that we're a hedge, against our ability to spend on these things and/or our interest that we're looking at. But also, we're hoping to find new and different technologies that the company hasn't conceived or is working on. A real fertile ground for us is looking for tech actually that falls below the cut list, right? So a cut list being the programs that didn't get funded, the ones right on the line, the ones they wanted to fund but didn't fund. But there may be some technology out there or some small company who's working on something, and we'll try to hunt those down and figure out how to get engaged with them so that we can keep learning throughout before we may get around and provide some funding as a company into a program that we're working on. And hopefully at that point, we've established a relationship between that small company that they become part of that program going forward. At least that's the goal that we're trying to achieve.
What I think it's really neat about this, and just for perspective, we mentioned it earlier, but it's probably worth re-mentioning. Defense tech and what's going on in national security right now is top of mind for a lot of people, and venture capital in defense. I think Jake will get that in a second. But Lockheed started this in 2007, like 10 years before anyone was really even talking about venture investing in technologies that could help national security. I always say being early looks a lot like being wrong. And so, going through that, fighting for pennies, and then now it's like everyone wants to come to you because it's the thing that's, vogue right now.
It has been different, right? I mean, even when I got to Lockheed in 2016, the big thing right at that time was the Google mayhem, right? Step back from that, and that put a real dent in kind of defense focused investing for a while. I don't think we ever.
But Josh Marcuse has told me that Google is totally past that, and everyone's now on board with the national mission. So I just want to throw that out there, Josh, if you're listening. I'm representing.
I was in the Wayback Machine for a second there. Just so,
that's good. It's good.
But that was a challenge, and there wasn't a lot of interest in the space. Not that people didn't take our call. I've never had an issue when anyone refused a call from us. They recognize, particularly in the space domain and aeronautics domain, that we're pretty good at what we do. So if we're bringing our folks to a call, like we talked to a couple small radar companies. We brought the folks who work on Aegis radar. That's the big bad radar for air defense. So their eyes were like going to pop out of their head. Oh my God, you're the chief engineer on Aegis. We'd just love to talk to you. And so we're able to bring that kind of stuff in, or we bring folks in from the Skunk Works to talk to aero-based activities and so on. So we have a lot of credibility, a lot of knowledge, and we can get to the bottom of the tech pretty quick. And honestly, if we're making an investment, they pass a certain degree of muster that we're pretty sure that they're going to be good, at least technically, right? We still have obviously business issues and marketing thing and all the other execution things that have to go through. But at least at that point, we're pretty sure that the tech is in good shape.
I do find founders whose opinion of Lockheed Martin, or at least their fear of Lockheed Martin, is that you folks are out to take IP or sort of dig into what they're doing and then compete against them for contracts. I mean, you must run into that in the market. How do you convince founders that that's not going on or not in your interests?
Well, if you've known me for a while, this is an area I've been doing corporate venture for 20 years, and I've heard that, not even related to Lockheed Martin, it's just related to any corporation. People throw that out there sometimes, and I just think there's, maybe it happened at some point in the past, not by Lockheed, but maybe some company did that and burned somebody, and they've just floated around like a bad tweet that won't go away. It keeps happening over and over again. But I don't think that's rampant among the corporates. I'm not saying that there may not be some doing it. Certainly I'm not doing it, and most of the corporates that I work with are not doing it. It's not a practice. I mean, who would want to work with you if that was what you were doing, right? I wouldn't blame them to do that. But that is not what most corporates are trying to do. I think one thing I tell people when they're taking corporate money, find out why we're, unlike venture capitalists, pure venture capitalists, they're taking their money because they want to make money. But you have to ask a corporate, why are you investing in us? What's your strategy? Because I have to have a strategic reason to do the investment. And I tell them, look, if my strategy is not aligned with yours, don't take my money, because you're going to feel pressure, one way or another from me or from my people, because you're not doing what we thought you were doing or what you invested in. And you don't want that. I don't want that. I mean, we're okay with pivots. I mean, if it's a logical thing, obviously, but we want to make sure that the reason you're taking our money is the same as why we're giving it to you. And if they're aligned, that's going to be a great relationship, but ask. And if there's, you're at cross purposes or something or whatever, don't take the money. I mean, that's the name of the game. Work with somebody who's going to be a good partner with you down the road. And that's what we hope to be, a good partner with the companies we invest in.
now that defense investing has kind of exploded recently, do you see that the number of successes and exits and there's enough deals to go around to sustain the money that's going into it? It just seems like the value proposition at some point it's like, hey, there's too many there's too many of those storage buildings in my town, and there's not enough people with stuff to put in the storage facilities,
Yeah.
right?
I
That's
don't
my
know.
that's my where I live. That's my issue. It's just the economics of it don't make any sense.
It really is a great question, and one, we haven't seen the end yet. We're at the early phases of this, right? We've actually had a few well-known purpose-built defense companies right now, which in the whole history of venture capital has almost basically never existed. So this is sort of a trial balloon. Is that going to work? But what we do know is that over the last 20 years or so, VCs have largely stayed away from the space because of the way the customer buys, right? It's not clear. It's changes direction every couple of years. A budget that was
It's a very, very finicky
yeah,
customer.
very and hard to predict. I mean, when you look at one of the things when you're doing an investment as a VC, one of the things you're looking at is the market. And the thing you want to know there, it's either really large today or it's going to be really large in a short period of time, right? You want to be sure that because a large market does a couple things. One, it's tremendous opportunity, obviously, but a large market can support multiple competitors. That's the other part. So your risk of other entrants is actually mitigated by the fact that it's a large market. But if you don't know whether it's a large market, maybe it's a big number, but it can only support one competitor, then you have binary risk. It's a 1 or 0. You're going to win it or you're going to lose it. And that's added a lot of risk to the investment calculation, right? So you have to either be pretty sure you've got something unique and capable and you're going to win and you're going to beat off all comers, or you could suffer a really terrible loss. So I think we haven't seen the end of that movie. Back to your movie analogy from the beginning, that we're in the first scene. We're seeing how that plays out. I mean, obviously, the nation needs more companies to come in, and we're encouraging companies to do that by our investments. But I think how we're hedging it is we're trying to focus on companies that have dual use, right? That there is a strong commercial pull, that there is a market there in normal market senses, but the tech can be used in the defense space as well, and that's how we're trying to hedge that a little bit, not going. I wouldn't say in everything we do. We do have a couple pure defense investments, but for the most part, we're trying to do dual use.
I see Jake getting triggered right now. So, have you read his op-ed about dual use as a trap?
I
I'm
don't
just
know,
I'm
Jay,
just messing with them
me.
now.
Did I just walk into the trap? Okay.
No,
I don't know.
I don't know. No, I think dual use is great. Dual use is great. COTS is great. 100% for the department, right? I love that. Do we need to do the dual use rant? Okay, so I'm not a huge fan of the dual use narrative that the department tends to push, which is they want companies to build commercial first and defense second for a couple of reasons. One, I think it is a cop-out on behalf of the department so that they don't have to solve their acquisition challenges, right? What they're saying effectively is we're a shitty customer, so go build for the commercial market, get to be self-sustaining, and then come and run all our traps, right? Once you can afford that.
Yeah.
I think it's problematic because I think even you, Chris, we want to diversify the defense industrial base, which we can talk a little bit more about next. If the department is segregating problems into pure play defense problems, and this is where the primes can play, and then all other problems and startups will let you play there, you're never going to get real startups moving on up the chain and competing against the big primes, right? Diversifying sort of the top of the market. So that's a problem. And then my biggest problem with it is if you do commercial first, defense second, these aren't problems as a capitalist, right? These are problems as an American who wants a robust defense industrial base.
Right.
If you do commercial first, defense second, and you have to find product market fit in the commercial market first so that you can then survive the DoD process, that means you've developed the technology on day one. You spend 5 to 7 years finding product market fit. Then you put on the green paint and you burnish it up for defense use cases. By the time you're selling it to the department, you're 10 to 12, 15 years past the development of the technology. if China is taking their technology on day one and putting it straight into the PLA and the plan, or whoever it is that they're giving it to, then we're institutionalizing a 10 or 15-year capability gap. And I don't think that we can run a system like that.
And the counterpoint, the last episode we had Blue Force Technologies on, and what makes them unique is they did quote commercial first and then defense second, with the following highlight. They used their, call it 8 years or so as a small company, figuring out how to do things with advanced manufacturing as a sub-supplier, so like a tier 3, tier 2. And now they're using everything that they've learned, their proprietary methods, to then build a product that will now take them into a prime kind of role as a platform. They actually have a product and not just a supplier. So I think that there is an application there. There's a little bit of nuance there, and they're able to use their, you can listen to the show, but they're able to use their income and the stability of an existing business to then fill in the blanks when all of the processes in the normal Department of Defense funding fall through, which they do. And they went that length to talk about every program that they've won. There've been funding gaps, contract gaps, because of the way that the PPVE process works. And so having that part of the dual use, when you look at it from that perspective, I think it's a pretty sound strategy. Obviously, it's patience. If you're looking to get rich in the next 36 months, that's not the play you're looking for. But there are, I think, some nuances in the strategies that you can do to kind of appease both sides. But to Chris's point, yeah, the dual use, obviously you have multiple customers, which then, if you have one customer and they're really, really finicky and they're hard to deal with at times, diversifying that with other customers to sell your product, build once, sell multiple times, is probably what you want to aim for.
You need a lot of patience to do that, right? Because when you look at the businesses in general, the margins are quite a bit lower. You may be diluting your overall company. I mean, there are all sorts of problems with it. You've got to have patient shareholders and a patient board. I mean, it's not just I'm going to go off and do this. It does require kind of a mission focus to get that to happen, and a lot of patience on all parts to do it. So it's tricky space. That's why I applaud the folks who are doing this right now. Hopefully they understand what they're getting into. Some of this stuff isn't venture scale the way that we see an Uber or an Airbnb or something like that. There's money to be made, but it's probably not at the multiples that people look at usually when they take this kind of risk. So we'll see how it turns out.
I wish your margins were higher, Chris, so that the market gave you higher multiples, so that you could buy our companies for higher multiples. It's a complicated problem.
If you know somebody you can talk to about that, please do.
Yeah, are there any analysts listening to the pod who want to, Wall Street analysts? Let's figure out if we can fix this.
All right, let's switch gears a little bit, and we've been talking about venture capital and some of those nuances for a while, which is great. So we'll still talk about Lockheed for just a little bit longer, then we'll keep expanding the aperture for the rest of the show, if that's okay. Keep it a little more interesting. Sure. So Jake, we were talking about some questions, and Jake came up with a good one. Who is your favorite Lockheed Martin CEO, and why is it Norm Augustine?
Well, I honestly I don't know all the history. I've heard these names and read some things. I think everyone is, even Lockheed's a company that's got a lot of longtime employees, and everyone has some CEO that they like, usually from the time when they started and they learned the ropes. Marilyn Houston was in charge when I joined, and I really appreciate the fact she allowed this group to grow, and she doubled the fund. But I have to say that the Jim Taiclet, the current CEO, has been incredibly supportive. He comes in sort of as an industry outsider to some degree, spent 20 plus years in the telecom industry, and he's focused on getting Lockheed to learn about outside tech, which is obviously an area that I focus on. But he's encouraging partnerships across the board in Lockheed, and I think really trying to accelerate the way that we learn, that we grow, that we deliver programs, and just in terms of the leadership and the direction, I think he's really got his foot on the right spot right now.
This episode sponsored by Jim Taiclet.
Yeah, send this directly.
So Boeing Defense kind of did the same thing. So their current CEO was like their CIO, like basically like the IT guy.
Yeah.
But again, to your point, like the leadership qualities and just bringing a fresh set of eyes to some problems that are at times you walk past it long enough and then you just kind of blends into the background. It just becomes part of the daily routine. And so yeah, fresh set of eyes is I'm a huge fan of that.
So I ask about Norm Augustine just because, I mean, I don't know anything about him other than he has a list of Augustine's laws that have been published, and they're all Yogi Bearisms that are like very industry specific. And I'm going to read my favorite for you right now. In the year 2054, the entire defense budget will purchase just one aircraft. This aircraft will have to be shared by the Air Force and Navy 3.5 days each per week, except for leap years when it will be made available to the Marines for the extra day. And there's a chart, maybe we can drop this in the show notes, that shows the average cost per aircraft charted over time. And in fact, in the year of 2054, the average aircraft will basically cost the entire defense budget. But he's got like 30 laws. I recommend you read them all. They're hilarious.
There's actually 54. So he published them in the 80s in an article. There's 54 of them. Some of them are long like that. Some of them are like 5 or 6 words. I've heard that
like
one many
Kelly
times.
Johnson's rules better, if you're a student of that.
Yeah, let's talk about that in a second. My Augustine one I'll throw back at you, Jake, is this one. The thickness of a proposal required to win a multi-million-dollar contract is about 1 millimeter per $1 million. If all of the proposals conforming to the standard were piled on top of each other at the bottom of the Grand Canyon, it would be a good idea.
All right, here's another one. One should expect that the expected can be prevented, but the unexpected should have been expected. Think through that one.
Yogi Bearism.
Yes.
Then we get into Yogi Bearisms. Yeah. Okay, let's talk about Kelly Johnson.
I just recently met somebody who worked for him for a month before he retired, so that's about as close as I've gotten to him. But clearly, the man is absolute legend in this company, and for great reason, right? Many of the hallmark aircraft he had his finger on from the SR-71, which it's just still amazing, the fan clubs around that aircraft and the current posts and things. And I absolutely love looking at that stuff. And every time I go to the Udvar-Hazy Museum, I go stand by it and take a picture. I mean, just incredible aircraft to see in person. So he is absolute legend. A funny note on that not a whole lot of people know, but at the Skunk Works in Palmdale, California, they have a little museum, just a little museum. It's maybe the size of one room. And in that museum, there's a briefcase, a hard-sided briefcase that inside is a model of the SR-71. And on that briefcase is Kelly Johnson's TWA ambassador tag. And you can imagine that he took this thing. This is before the days of PowerPoint. So this had to be in the early 50s, before the days of PowerPoint. Took this briefcase to the Pentagon or the agency or whoever he was. I think it was the agency who bought the first ones, and assembled. You could see him in the lobby assembling this thing to bring in this small mock-up of the aircraft, which ultimately sold it, obviously, and in which they bought it. And I'm looking at this and I go, are you kidding me? And that's how he did it. And that briefcase with that model is still sitting in that little museum, and very few people know that. I'm just proud to share that with you.
I have heard of the museum. I also heard it's very hard to get into.
You have to be a citizen. You have to be a whole bunch of things. But it's tiny little museum on the grounds.
So besides Kelly Johnson, there's another guy, Ben Rich. Are you familiar with Ben Rich?
Ben did the F-117, right? But they managed the program behind the F-117, which is on a pole in front of that little museum in Palmdale. We have one stuck up there. And I understand 3 of them are still active, and they fly over DC periodically because my daughter, who lives out that way, runs out because of the incredible noise and sees them flying in the sky and says, "Dad, I think I just saw 3 UFOs." And I'm like, "What'd they look like?" "They look like flying triangles." I know what those are. Those are F-117.
There's probably more than 3. But yes, they're out there flying around still for things.
I've heard that their radar cross section is still one of the smallest, and so they're used to test out new radar systems.
Yep.
I don't know what else they're used for, Mike. Maybe you have more intel than I do.
Well, if I did, I wouldn't tell you. But yeah, so Ben Rich, if you guys don't know, he actually worked under Kelly Johnson, and then Kelly Johnson basically handpicked him to be the successor when he retired. And if you go on Lockheed, which is the reason I bring this up, if you go on Lockheed Martin's website, the title of his kind of like, nod to his history in Lockheed Martin is called The Invisible Man. Because everyone knows about Kelly Johnson, but not a lot of people like can really think of like, who's the guy that did all the other stuff after Kelly Johnson retired and like basically brought Lockheed Martin into like the modern age with Skunk Works. And that was Ben Rich.
Yeah. Well, he wrote a great book titled Skunk Works, so easy to find. And I would say it's probably the seminal work on Skunk Works, so maybe that's his claim to fame. I mean, it should be the F-117 and the stealth program.
Claim is stealth, right? I mean, he brought
the
next gen aircraft were
the Hopeless Diamond, like that was his baby, which turned into the F-117. Yeah, that's, I mean, to have a foundational belief in something that everyone else like, that is impossible, and to find a way, the engineering and the mathematics and everything to like turn science fiction into science. That's where I think it's like a remarkable achievement, and you see it in different sectors today too. Like you can imagine the impossible and then make it possible. That's where I think people like that just become legendary.
Yeah.
Which leads us to the next topic, which is what's next out of Skunk Works. What can you share?
I know they're very busy, but I don't know anything. I can't say anything that they're working on, but they are extraordinarily busy. I think the next Top Gun movie is on the agenda, to be honest with you. I don't have any confirmation to that effect, but I would hope that we get engaged on that one too. But they're extraordinarily busy. If you've seen the site, we've expanded the site. The activity there is just going out of the roof. There is one program that is well known. I think it's called the X-58 or the Quiet Supersonic. We've just put the empennage on the tail, and I think it's going to be ready for flight test later this summer. And the beauty of that aircraft, it's supposed to prove that you can fly over land with the low sonic boom. And so that's a focus. And if that groundbreakingly does that, that opens up the skies for very short trips from LA to New York, which we would all love to have. But we're going to look to that space over the next couple of months and see how they do.
Yeah, man, flying to DC, it just kills a day. Absolutely kills a day.
All you left coasters out there, you just move. Chris, are you a left coaster as well?
I am.
Are you in
okay. I'm near Stanford. I'm in Menlo Park.
Oh, that's right. Yeah, you told me at the beginning. When I think Lockheed Martin, I think of Texas. Just
you did. So my team, half is in our Bethesda office. Headquarters is in Bethesda, and half is out here in Palo Alto. Lockheed has a research facility here called the Advanced Technology Center, and our team is centered around there. So it's part of the Lockheed Space organization, at least location-wise. We live in the Lockheed Space location.
Well, we're getting a little short on time, so I got a couple more questions for you if you want to keep going.
Sure.
All right. So, if you were in charge and you could wave a magic wand and change something, just one thing about how the Department of Defense works that would help industry, what would that be? What's your magic trick?
I think just be a reliable customer in a way. I mean, in the way I'm thinking like a venture capitalist, if you could see clearly the opportunity over the next couple of years, maybe 4 years, then that would encourage you to invest dramatically in those spaces. But with changing minds, changing priorities, rapidly changing, it's hard to muster the interest and the capital to focus on things like that. And I think that's the challenge, not only that a large prime has, but any company has, trying to see the government as a customer, is that variety, you called it fickleness earlier on, that variety of demand, it makes it really hard to do the investment needed to support that. And I think if a lot of things will be fixed if people knew the scale of the opportunity was consistent. Capital would flow and problems would go away.
So, Chris, if you haven't listened to this podcast, we're kind of known for spicy takes occasionally.
Okay.
Jake generally kicks off with his own random spicy takes, but that's okay. And I think this might elicit a spicy take from you for this next question.
It doesn't involve chicken wings or anything, does it? Nothing like.
No.
We should eat chicken wings while we do this show. I don't know.
I feel like there's a YouTube channel that does that, but it's not about defense and about defense stuff. That would be yeah. Okay, so we've been talking about defense tech. A key part of venture capital is funding and defense innovation. What is like the thing that you see, been in this game for a while, that almost everyone gets wrong about that?
Mm. Well, you know what puzzles me sometimes is um, you can see fads run through this industry, right? You can just see sort of pile on mentality and trying to understand that. Is that enhanced by social media? Probably to this day. But you have to ask yourself, does the world really need 200 space launch companies? Do we need, 200 eVTOL companies? Like, whoa, I mean, what's wrong with that? That's wrong, right? That pile on mentality where everyone has to have their own thing, whereas the markets are probably of a certain size. If you just work through the economics of it, the industry could probably support 40 launch companies, not 200. Could probably support 20 eVTOL companies, not 200 plus. And we seem to get that wrong a lot. Everyone piles on. Some of the big name firms do an investment, and then every other firm's, oh, I got to have one. I got to have one. And they can't get into that one. So other companies pop up, and before you know it, you've got hundreds of them. And what that does is diffuse the capital, right? For the few companies, particularly like eVTOL, where they're going to need $1 billion, right, to build and certify their vehicles, certify their manufacturing, to become human flight certified. Well, it's hard to get $1 billion if you're taking maybe the total money and dividing it across 200 companies. It's just not going to work. So if you really want to make progress forward, that can't happen. And I think we can look at all the waves that happened in clean tech, and basically when I started in venture in 2005 or so, it started in clean tech, and then it was fintech, and then AI. Now we're in a generative AI thing, and you're going to see people pile into that. And what's the market and opportunity for that? And on and on and on. So these weird cycles that sort of work through the industry are not a great use of capital, right? And we ought to be better at figuring out who's going to win and not, and what the capital requirements are, and funding the right companies and doing the right thing. But
That's a great point. And it's great that you mentioned those two particular sectors. There's going to be a graveyard of companies in both of them. Yeah, the value proposition of, if you look at competitive analysis, like you have to be like 10x better to have differentiation in the in the talent pool.
Right.
And whether that's you could 3D print a rocket that's 10 times cheaper, or you could cycle times are 10 times faster. The eVTOL one's interesting to me. I think you have one or two in your portfolio, maybe.
Yeah, we do.
Yeah, for me, it comes down to, it's not the vehicle. I mean, you can build a vehicle, you can put some electric motors on it. It's the energetics, the advancement of the energetics, to have the battery storage, the capacity to get the range and the cycle times, your regeneration sortie rates, if you will. Like, that's the magic trick. And it's until that gets kind of figured out and someone can create a moat using a next gen type battery.
Yeah, in fact, that we focus on companies right now that are hybrid power, right? So it's a turbine genset that produces electricity. So all the motive forces, all the motors can still be electric and progress along that pathway and improving and lowering costs. But the batteries, particularly for military mission space, aren't there. It's just going to be very difficult to sell an aircraft to the military that has to recharge every 60, 100, 150 miles, right? Because the mission space is very different than that. So the vehicles that we've invested in have a hybrid power source for that reason. The military really knows how to move diesel and Jet A around and is very effective at that. And if you can fill up quickly in remote areas with that, you're going to be good. Now, not to say the batteries won't get better. They will. Charging infrastructure will be available, not always in a military forward operating base, though. So we have to balance those needs. So the companies we've invested in have a distinct sort of military logistics play, and that's what we're trying to focus them on, and that's how they're getting around that. But a lot of the folks that are all in on batteries, good luck to them. There's a different subset of the use case that they're going to be able to go after, but there's a lot of other investment that has to happen to make that practical and work at the same time. So that again adds to how much money a company needs to be a viable electric flight company. And when you've got hundreds of them, you're just dispersing cash. You're diffusing the cash down in a way that's going to make it harder for those few to succeed.
I'll pile onto your diffusion of capital answer. I think it's also diffusion of talent. When capital is cheap, the person who should be the VP of engineering for the best eVTOL company goes and raises money to start their own. And so you don't have all the A+ players getting together and putting their efforts behind one push.
Yep, agreed.
I think we're about out of time. Jake, any final questions or parting shots?
Should we do the lightning round? I like the lightning round.
All right, we can do the lightning round. You got it.
All right, we're going to do a quick lightning round, Chris.
All right.
All right. F-35 or SR-71?
Oh gosh, you're my two loves. I mean, historically the 71 got to go there, but if you've seen the 35 fly, you'll be a convert.
DC or Bay Area?
Ooh, I mean, again, I'm Bay Area, and I grew up on the East Coast, but I've been out here for 30 plus years. I'm Bay Area minded, and finally the weather is playing nice, not like it did the first 3 months of the year, but.
Yeah, hard to beat the Bay Area. All right, build or buy?
So I'm actually advocating that a third one, partner.
Good answer.
Work with other people, right? Try. Not that you shouldn't build and buy, but you have to add a third capability there.
All right, capability or capacity?
Today it's capacity, right? That's what we're struggling against. Is just the availability of munitions. Right.
You think we learned our lesson for switching to a generation of just-in-time lean manufacturing instead of like we traded resiliency for efficiency? Think we've learned our lesson?
I don't know if that's the lesson I take away. I mean that why when you're a finance person, why do you want to accumulate millions and millions of dollars of stuff in your supply chain with very low turnover, right? You want to find the happy medium. You want a blend of that. But I think what we learned is you have to anticipate changes, sort of black swan events that cause things to happen. And just because you're just in time doesn't mean that's not a proxy for not resilient. That was, your fault for not making sure your suppliers had some kind of burst capacity or flex capacity. And that all of that does add ultimately cost to the supply chain. No one's going to put standby capacity in if they don't see that it's going to be used over time. And that's what we saw, 20 plus years of winnowing out of that kind of capacity because they didn't see a demand signal. Back to that customer question you had before. If there's a consistent demand signal or requirement to have that capacity, people will plan for it, put it in, they'll cost it out appropriately, and it'll be there when it's needed. But I think people didn't see the need for that. We got complacent, and we have to work on that.
I completely train wrecked your lightning round, by the way. I just want to highlight that.
You did, Mike. You threw off the cadence, but it was a great question to dive into. So,
all right, you got it. Continue.
All right, there's just two left. The cadence is all broken now. So, Star Trek or Star Wars?
I'm a Trekkie. Sorry.
That is by far the best answer, the right answer. And then the last one, Shoe or Kendall?
Shoe or
Heidi Shoe or Frank Kendall. I
don't know how to answer that
it was supposed to be a quick cadence, so we get to the last question, and then he answers without thinking. Mike.
Kendall.
That's probably the right answer.
Okay.
I lean that way as well. Maybe that's just me. Chris, before we leave, how can people get a hold of you and learn more about what Lockheed Ventures is doing?
Well, as always, we're very open. Our website under the Lockheed Martin moniker, you'll find us in there. Our whole portfolio is there. The way to contact me and my team is on there. You can even submit a business plan on there. So we try to be available. The team is usually out at the various conferences and venture events. We try to be very visible. We'd like to get that connection with folks, and we're a good entry point into Lockheed Martin if you're a small company. So whether you're looking for money, you've got some really cool tech that makes sense for us to see as an organization, you can start with us. We're glad to talk with you.
That's a great way to wrap it up. Thanks, Chris, for joining us today and sharing what you do.
Really appreciate it. Thanks so much for having me.
See ya.